friends, first let me introduce myself. It's Shruti here. I'm a qualified cost and management accountant by profession, and I'm proud to say that I'm also a student of Jisrao Academy, where I qualified my same examination in the year 2017. As I'm passionate towards teaching, after clearing my same examination, I'm working with the same institute as a faculty, where I will be handling up the practical papers, and my core paper in that is financial accounting. And the purpose of making this video is to give just a glimpse of where I'll be explaining about bank reconciliation statement. Okay. First of all, let us understand what is bank reconciliation statement here. As we know, why this particular bank reconciliation statement will be prepared again here. See, as we know, a business, if they are running a business, means in day to day, various numerous number of transactions will be carried on by the business. So accordingly, what the businessman will do, he is whatever the transaction he does, to enter them, he will be maintaining a cash book. And what are the transactions is that whether all the transactions he does only with the cash? No. There will be few bank transactions. Bank transactions means where he may be making the payments in the form of check, and where few payments from the customers he may receive in the form of check and all. Nowadays leave check, this completely online transactions happen with the help of Google Pay, Phone Pay, UPI, Paytm, so many options you have. So those are what are the transactions, the payment you make. It will be nothing but what? Bank transactions. So what happens? A cash book and the bank book, whatever is maintained by the businessman, sometimes it may not tally. What are the balance will be shown under the cash book, and what are the passbook, the balance will be shown for the businessman may not tally. What is the reason for the difference in the balances available in the cash book and the passbook, bank passbook? For that purpose, usually the bank reconciliation statement will be prepared by a businessman to understand why the difference arises. So now let us understand as per the material here what they have given. First, they are explaining about cash book. As I told you already, usually cash book will be maintained by whom? The businessman. The entity is going to maintain. Let us go through here. Point number 1. What they are telling, cash book maintained by the entity in its books of account contains bank column to record bank transaction affected by it during the accounting period. See, usually the businessman, what are the transactions he does to enter all those transactions. It may be the transactions of payments, or it may be the transactions of receipts. For example, from the customers he may receive the amount. He may, whatever the purchases, goods he has purchased, he may make the payment to the wholesalers and all. Okay. So in that situation, in that particular cash book, again, as we know, various types of cash book will be prepared. Single column cash book, double column cash book, triple column cash book and all. So when it comes to double column and all, a cash book can be maintained along with that of bank column. In the bank column, what details usually we are going to show? What all the bank related transactions has happened, all those transactions amount will be shown where? In the bank column. So here what they are telling, cash book maintained by the entity in its book of account contains a bank column. Means bank column they are maintaining, means usually they may maintain a double column cash book or a triple column cash book to record bank transaction affected by it during the accounting period. During the accounting, usually accounting period means it may be April to March, or it may be, if they are adopting the financial year means it will be April to March, and if they are adopting a calendar year means it will be Jan to December. So during that particular accounting period, whatever the business bank transactions has happened, it will be entered in the cash book, and especially it will be entered in bank column. And bank account is in the nature of real account. So actually, when we understand the different kinds of account as per Indian system, they classify into 3 as we have the idea. They classify it as personal account, real account and nominal account. Usually when it comes to bank account, we can classify it as a personal account as well as real account as well. Both the classification is agreeable here, because as bank, if bank account is maintained, means what happens, all cash transactions, what are the cash payments will be done, or what are the cash receipts will be received, all those transactions will be entered in bank account. So accordingly, it can also be treated as a real account as well. It can be considered as personal account, and also it can also be treated as a real account as well. So accordingly, what might be the treatment? What is the rule of real account says? Debit what comes in, credit what goes up. So accordingly, what will be the treatment? Any deposits made by the entity will be recorded in the debit side. So whatever the deposits will be received by the entity, it will be recorded in the debit side. Any withdrawal or payment made by the entity will be recorded in the credit side. So this is how the treatment will be given for the bank transactions, whatever is done by the organization. Next we have is bank passbook. Usually bank passbook will be maintained by whom? By the bank, the customer's account. What are the transactions the customer is going to make with the bank? All those transactions will be entered in bank passbook. Now let us understand point number 1. Bank passbook is merely a copy of customer account in the books of the bank. So as I told you, usually the banker, when we maintain the when we open up account, what are the transactions we do? It may be the transaction of deposits, or it may be the transaction of withdrawals, or it may be we may make the payment on behalf of us. The banker is going to make the payment to the other parties and all those transactions, whatever we the customers are going to do, all those the banker is going to enter in bank passbook. So we can tell it is merely a copy of customer account in the books of the bank. All deposits and withdrawal made by the customer during a period will be recorded in the bank passbook by the banker. So whatever the deposits are made or whatever the withdrawals are made by the customer during that particular accounting period, everything will be recorded in the passbook. And who is going to enter here? The banker is going to enter all those transactions. How the treatment will be given in bank passbook here? All deposits made by the customer will be recorded in the credit side of the passbook. Very important. When it comes to cash book, whatever the deposits are made, what we do? Whatever the deposits are made, those deposits will be debited. But when it comes to bank passbook, whatever the deposits will be made by the customer, it will be recorded in the credit side of the passbook. And all withdrawals made by the customer will be recorded in the debit side of the passbook. But when it comes to cash book, the treatment is again differs here. Whatever the withdrawal or payments will be made, it will be recorded in credit side in cash book. And what are the deposits will be there, that will be debited in cash book. But when it comes to bank passbook, it is just reverse. The deposits will be credited and the withdrawals or payments will be debited. Now next let us understand about bank reconciliation statement. Meaning, a statement which is prepared to reconcile the causes of difference between bank balance as per cash book and bank balance as per passbook is known as bank reconciliation statement. As I told you in earlier case also. There are some situations, usually due to some circumstances, what happens, whatever the balance is available in cash book and whatever the balance is available in passbook, the bank balance in the cash book and the bank balance in the passbook may not tally. To reconcile or to analyze what are the reasons for the difference in the bank balance as per cash book or the bank balance as per passbook, they are going to prepare which statement? Bank reconciliation statement. Which facilitates the businessman to understand why the difference arises in both the books. Now let us understand about features. Point number 8. It is a statement. It's just a statement. It is not an account. When this particular statement will be prepared, only when the difference, whatever is available in the bank column as per cash book and the bank column as per passbook, if they are not tallying, if they are not matching with each other, in that particular situation, the statement will be prepared. Point number B. It is not a part of process of accounts. It is not a mandatory accounts which has to be maintained by the businessman. It is not a mandatory process. There is a second feature. Point number C. It is prepared to reconcile the causes of difference between the bank column as per cash book and the bank column as per passbook. As the meaning itself we understood. What is the purpose of preparing this particular BRS? To reconcile, to understand why the difference arises between the bank column as per cash book and bank column as per passbook. That is the third feature. Next point number D. It can be prepared at any time during the financial year as and when it is required. So to prepare this BRS statement, there is no specific time period. It has to be prepared in the month beginning or it has to be prepared at the month beginning of a quarter. No specific time period is required. Whenever the businessman requires, he feels to prepare the BRS, he can prepare. There is no restrictions on the time. Point number E. It is prepared on a particular day. It is written as bank reconciliation statement as on. So whichever the date it is prepared, on which particular date it is prepared, that particular date has to be mentioned. This is about the features of BRS. Now let us understand about importance and significance. Point number 8. Reconciliation will bring about any errors that may have been committed either in cash book or in the passbook. In case if any errors or if any mistakes has been committed in the preparation of cash book or in the preparation of passbook, in the situation also to understand what all the errors has happened, the BRS helps in the identification of those errors. That is the importance why usually the businessman is going to prepare BRS. Point number B. Any undue delay in the clearance of checks will be shown by the reconciliation clearance. See, sometimes what happens? The businessman is going to issue check for the payments. Whenever he issues, what happens? Immediately in the cash book is entered that the check has been issued, the payment has been made. And immediately he is going to enter. Now let us assume for the person whoever the payment has been made, he is not presenting the check immediately. After 2-3 months he is going to present that check and he is going to collect the amount. In the situation what happens? There is a delay in the clearance. So accordingly what happens? The difference arises. So what is the delay in the clearance of check can also be understood by preparing reconciliation statement. Next point number C. The regular reconciliation discourages the accountant of the bank from embezzlement of cash. In case if whoever the accountant is maintaining the books of accountant and all, if he is having any plan of deceiving the activity, deceiving the businessman, those can be easily caught up by preparing this particular reconciliation statement. There is another advantage. Next point number D. It helps in finding out the actual position of the bank balance. How much bank balance is available can be known by preparing the BRS. These are the importance or significance for preparing BRS statement. Now let us understand the causes of difference. Why the difference arises, the balance in the cash book or in the passbook in the bank column. What are the reasons? Now let us understand. The first is the timing difference. Point number 1, what they have given, let us go through. If a transaction is recorded in both the sets of book, still becomes a reconciliation item due timing of recording. So usually what are the transaction? Both the set. Here both the set of books means which books here? Both the set of books means one is cash book and another is passbook. If in the cash book, if it is recorded on 1st Jan and the check is not presented up to 1st February, in the situation what happens? As the time difference arises, in cash book they have entered on 1st Jan itself, up to 1st February they have not presented the check. In this situation what happens? The balances in the cash book and the passbook will not tally. So that is the first reason. Example, check presented for collection will be recorded immediately in cash book, but will be recorded in passbook only when such check was realized. See, whenever the check is presented for collection, check is collected for collection means whenever the check is received from the customer, what the businessman will do, he is going to present that particular check to the banker for collection. So when he is going to present, immediately he is going to record that he has received the cash. But when actually the banker is going to make the payment to the businessman, only then it will be entered in the passbook. Until and unless the banker is going to make the payment, he is not going to record. So as there is a time difference arises, accordingly the balances are going to differ. So this is the first reason why the difference arises. Next, the second reason is transactions. What they are given, let us go through. There are few transactions that will be carried out by the bank itself without an intimation to customer. Hence, not recorded in the cash book results in reconciliation item. See what they are telling. There will be few transactions which will be recorded only in the passbook by the banker, and the banker is not going to give any intimation that those particular transactions has been recorded. So in this situation what happens? The businessman will not be having any idea about those particular items whatever has been recorded by the banker in the passbook. So in this situation what happens? As those transactions will not be recorded in the cash book, accordingly what happens? Again the difference arises. Which all the items will be recorded only in the passbook and intimation will be not given? Now we have in point number 2. Example like bank charges, interest credited. See, usually as the bank is going to provide us the SMS facility, ATM facility and all, in the situation yearly once what they do, they are going to deduct those charges and all. So it will be debited in the passbook, and it will be immediately deducted in the passbook. As it will not be entered in the cash book, what happens? The cash book balance will be showing higher as it is not deducted in the cash book, but in the passbook balance it will be showing less because that particular bank charges will be deducted. When it comes to interest credited, for example, let us assume as businessman usually they will be maintaining the current account, or any interest has been credited. If any interest is earned and if it is credited, if it is credited means what happens? The passbook balance will increase or decrease here? It is going to increase. Credit means it is like a deposit and it is going to increase. Means when the interest is credited in the passbook balance, what happens? The amount is going to get increased. But when it comes to cash book, the interest amount is going to get is not recorded, so the cash book balance will be showing less, but the passbook balance will be showing higher. So again the difference arises. This is the second reason why the difference in the cash book and the passbook arises. And next we have is errors. Point number 1. Mistakes or errors made in preparation of accounts either by bank or by entity leads to disagreement of balances between both the sets of accounts. Sometimes what happens? Some mistakes or errors at the time of preparation of accounts may happen. It may be either made by the banker or it may also be made by the entity, the businessman or the accountant, whoever is maintaining the books of accounts. Okay, so due to those errors also, again what happens? The balances in the cash book and the passbook may not tally. Point number 2. Rectification of errors is required to be done in both the statement before preparing any BRS. So what they are telling, whenever the BRS is prepared, prior to BRS, rectification of errors, if any errors or mistakes are identified, those errors has to be rectified by passing the rectification JEs. Only then the BRS has to be prepared. These will be the 3 main reasons why the difference arises. What are those 3? One is due to timing difference, and the second is due to transaction, and the third is due to errors. So next we have a problem. Let me take up the first problem. Whatever the concept we have understood, now let us apply here. Let us go through problem number 1. What they are telling? From the following particulars, prepare a bank reconciliation statement for Jindal Steel Limited. See, they are given the few transaction data and they are asking us to prepare a bank reconciliation statement for the Jindal Steel Limited company. Point number 1, what they are given? Balances as per cash book rupees 2,40,000. Means as per cash book, what is the bank balance is available? How much bank balance is available in the cash book? In the bank column they are telling it is about 2,40,000 is there. Point number 2. Check issued but not presented in the bank amounts to rupees 1,36,000. Check issued. What is the meaning of that? Check issued means here the businessman, the entity has made the payment here. The payment they have made means in the cash book what happens? The in the cash book the balance will increase or it is going to decrease here. When the payment is made, the cash balance is going to get decreased. Means already in the cash book it is deducted. This 1,36,000 will be deducted here, but not presented in the bank. Not presented in the bank means already the entity has issued the check and accordingly they have deducted the cash book. It is not presented to the bank means as the check is not presented, there is no change in the passbook. It is not deducted. So due to which what happens in the cash book balance has decreased, but the passbook balance, what is happening? There is no change. It is higher. Next, point number 3. So point number 3, what they are telling? Checks deposited in the bank but not yet cleared amounts to rupees 90,000. Check deposited into the bank. When the entity is going to deposit the check here, whenever they are going to receive the check from the customers and all. After when a check is received, what happens? Here cash comes in. Means the cash balance is going to again increase or decrease here? Increases. So accordingly what happens? Whatever the check is received in the cash book, the entity, the accountant, what is going to do? He is going to add that particular amount whatever the check is received. Means in the cash book what happens? The balance has increased but not yet cleared. Not yet cleared means again it is not presented. It is not presented means there is no change in the passbook. So accordingly what happens? Again the difference arises. Point number 4. Bank charges amounts to rupees 300. Here when it comes to bank charges, who is going to charge? The banker is going to charge. So as per the regulation, the banker is going to, this bank charges will be debited or credited here? The bank charges will be debited again here. When it is debited, what happens? the bank passbook balance is going to get decreased. It will be recorded only in the passbook. It will not be recorded only in the cash book. So accordingly, what happens? The passbook balance is going to get decreased. But when it comes to cash book, there will be no change. It will be recorded only in the passbook. Next point number 5. Interest credited by the bank amounts to rupees 1,250. Interest credited in the bank means here only the banker has recorded in the passbook and it is not recorded in the cash book. Interest is credited means what happens? The passbook balance is going to get increased or decreased? Increases. Means the passbook balance has got increased by 1,250 but there is no entry in the cash book. And point number 4, the balance as per passbook, how much it is showing? 2,86,950. But as per cash book, how much they are telling? 2,40,000. There is a difference. And few transactions they are given. Now let us understand by preparing the bills BRS statement whether they are going to tally or not. Let us understand. Let me take up the solution. So problem number 1. Particulars. Amount. Divide the page into 3 columns. Particulars, amount. First, let me take up balance as per cash book, whatever they are given. Let me consider the same. Balance as per cash book. Consider in outer amount column. What is the cash balance available? As per cash book, 2,40,000. Take in outer amount column, 2,40,000. Now, let me take the add items. Leave 2 to 3 lines gap, then just write down less items. Now, let us analyze the transaction and let us consider whether it has to be added or it has to be deducted for the cash book. So point number 2, check issued but not presented. So when the check is issued, what happens? Already it is deducted in the cash book, but it is not deducted in the passbook. So due to which, what happened to the cash book balance has decreased. So now I want to increase means what I should do? I need to add back. So take under add, checks issued but not presented. Issued but not presented in the bank. Write in inner amount column 1,36,000. Take in inner amount column 1,36,000. Now moving on to point number 2, the 3. Checks deposited in the bank but not yet cleared amounts to rupees 90,000. Deposit means what happened? The entity has received the check. When they have received the cash, what has happened? In the cash book they have added. So when they have added, what happened to the cash account balance has increased. But in the passbook there is no change, means the cash book balance has increased, means now what I need to do? I need to decrease. So accordingly what I should do? I need to deduct now. So take under less. Checks deposited. Checks deposited in the bank. Checks deposited in the bank but not yet cleared. Write in inner amount column 90,000. Write in inner amount column 90,000. Next moving on to point number 4. Bank charges amounted to rupees 300. So this bank charges will be entered only in the passbook by the banker. Means in the passbook it is deducted, but in the cash book there is no entry. Because the passbook balance is high, but in the passbook balance it has decreased, but in the cash book balance it is showing higher. So now what I should do? Again I have to decrease the cash book balance, means what I should do? I need to deduct. So take under less item. Bank charges debited only in passbook. Bank charges debited only in passbook. Write in inner amount column 300. Write in inner amount column 300. Next moving on to point number 5. What we have, interest credited by the bank amounts to rupees 1250. When the interest is credited by the bank, again it will be entered only in the passbook here. And when the interest is credited, what happens to the passbook balance? Increases or decreases? It is going to increase. Means the passbook balance has increased as the interest is credited, but in the cash book no entry, means the cash book balance is showing lesser. So I want to increase, means what I should do? I need to add. So take accordingly under add items. Interest credited only in passbook. Interest credited only in passbook. Write in inner amount column 1250. 1250. So now next, balance as per passbook. Now let us make this particular adjustment. If we find the total, we should get the balance as per passbook. How much we have? 2,86,950. First find the total of add items. Find the total of add items. 1,36,000 plus 1,36,000 plus 1,250. How much we are going to obtain? 1,37,250. Now find the total of less items. 90,000 plus 300, we are going to obtain 90,300. Now find the final total. 2,40,000 plus 1,37,250 minus 90,300. So how much we got? 2,86,950. Check the balance here. The balance as per passbook is how much? 2,86,950. Here also we got the same amount, 2,86,950. So here the bank BRS statement is going to helps us to understand why the difference arises in the cash book as per and passbook. So accordingly write in respect of it, balance as per passbook. Balance as per passbook. Okay, so this is how we are going to solve the problems on BRS. Thank you.